Let's begin the top 45 MCQs in CA Inter Auditing. Nothing but MTP1, MTP2 and RTP. These three related MCQs I'm covering in this video. See, like immediately you might be getting this doubt. How many marks will come from MTP and RTP MCQs? I'm telling you, whatever MCQs you practice from whatever the source, from all these sources put together, you will not even find two or three, not more than 2 or 3 MCQs. First, come out of the assumption that whatever MCQ you read, it will come in the exam. It will never. Why are we reading these MCQs? To understand the thought process. When you are practicing MCQ, what is important is, it's not about what is the question, what is the answer. It's about why remaining 3 answers we are eliminating. The thought process you should learn. If at all the thought process is developed, no matter whatever the MCQ that you have never practiced, still you can attempt it with a perfect answer. So remember, when you're practicing MCQs, the thought process is the learning, conceptual application. That is what you're learning here. You're not learning this MCQ. You're learning concept behind this MCQ. So watch these videos with that perception. Getting it? So let's begin MTP, not this is RTP. So let's begin, MTP1. Let's begin MTP1 related MCQs. So obviously we'll have 30 marks MCQs. Case scenario 1, each MCQs will carry 2 marks weightage. So case scenario 1, Dhanush, a CS student undergoing articles, is part of an engagement team. By the way, you listen to this without a failure. The analysis and all that analysis is very important. When I read a case study, link it with actual questions which they're asking. Why we are eliminating remaining 3? That understanding is important. Subject is so depth. Getting it? So see Dhanush, a CS student undergoing articles is part of an engagement team conducting audit of Test Enterprises Private Limited. Okay, it's a private company. The company is engaged in business of conducting aptitude and language tests every fortnight at centers spread all over major cities of the country for Indian students desirous of applying foreign universities. Okay, this company is testing some online examination. Center-based online examination is what they are conducting once in fortnight, once in 15 days for foreign, universities applications. It also sells books containing model test papers for the benefit of the students. So they are conducting examinations and they are also selling books. The company has substantial number of computers at each center. Yes, to enable seamless experience for students appearing for standardized aptitude and language test. Okay. The company has also acquired new identifiable software involving expenditure for conducting tests during the year, which is expected to drive company's revenue. So it's a substantial expenditure, software expenditure. At the time of taking a test, a CD containing the software is run in the each system for enabling students to take test. Cost of the CD without the software is nominal. CD cost is nothing much. The software is only major cost. When an intangible asset is in physical substance, where the physical substance is only a medium carrying intangible, and the physical substance cost is negligible, we still classify that physical substance as a part of intangible. Yes or no? This is what accounting standard 26 also says. This is what in items of financial statements also a principle has been told. The revenue of the company during the year 23-24 was 50 crore. Okay, they have given breakup. 45 crore from students, a fees charged from students for conducting tests, 5 crore from sale of books. Okay. Besides, the company has also received rupees 10 lakhs as interest on certain investments. So company has operating income which is 50 crore and other income, operating income, revenue from operations some 50 crore, other income is some 10 lakhs. The company has a history of profitable operations. Okay. During the course of audit, it is noticed by Dhanush that computers form significant chunk of PPE in the items of finance. Okay, computers consist of major part of the plant and fixed assets. The company has taken useful life of computers consisting of desktop for 3 years. Okay, the company has taken 3 years as a useful life. However, depreciation charged on computers, in the financials of the company is higher than depreciation allowable under income tax law. Obviously, in income tax we follow block of asset approach, income tax rates we follow, whereas in Companies Act we follow Schedule 2 rate. It results in lower accounting income as per the books of accounts of the company as compared with taxable income as per the income tax law. Okay, fine, let it be. During the course of audit, he notices that cost of CDs along with the software cost is treated as intangible asset by the company, which is very much correct. They just told, so cost of CD is nominal. It is also part of his responsibility to verify PP register in accordance with audit program. Yes, he has to verify register on for using, like nothing but on verification, on verifying the details in PP register. He finds that some computers have been moved from one center to another center to meet business requirements. Okay. Further, many computers were disposed or scrapped in the earlier years. However, proper details in relation to movement and disposal have not been entered in PPE. That is something CARO violation. Yes or no? In CARO, we have to check whether company is maintaining proper fixed asset register containing description, all that, and location also. Location has to be updated in the fixed asset register. If not, we have to modify our opinion in the CARO. Okay, when these items were physically verified by the management during the year, it has resulted in discrepancies. Oh, when they physically verified, they found discrepancies. The management has properly dealt with such discrepancies. Okay, they treated properly in the books of accounts. Fine, let's look at the answer. Considering the description provided in case scenario regarding accounting income as per books of accounts and taxable income under income tax law, choose appropriate responsibility for Dhanush. Oh, yeah, they are asking deferred tax related. So deferred tax is dealt under accounting for taxes on income, which is 22 standard. So obviously here they have given two standard numbers which are 29 and 29. So they straight away wrong. So we have to select between these two. Now tell me, under Companies Act, depreciation is charged high. Under Income Tax Act, depreciation is charged low. Which means under income tax, income is already higher. Because depreciation is low, income is higher. Under Companies Act, because depreciation is higher, income is low. Now tell me, accounting for taxes on income, tax also should be recognized on accrual basis, right? Tax also should be recognized on accrual, technically speaking. But we pay actual tax based on income tax computation, where the tax is paid on higher profit. Where we paid tax on higher profit. Getting the point? Whereas under Companies Act, we should pay tax on, we should pay tax on lower profit. Able to understand? So yeah, very simple. So the company has paid in income tax, lower depreciation, or higher income, they pay tax. Whereas in under Companies Act, we have charged higher depreciation, the profit is low. And technically speaking, we already paid compared to our in Companies Act profit. In income tax, we declared higher profit because of depreciation. Because of depreciation, I'm talking. Only depreciation related impact on profit I'm talking. Because of depreciation, in our Companies Act, the profit is low. Because of depreciation under income tax, we declared higher income in income tax and paid higher tax already. Which means higher tax we paid already means it's an asset. It's an asset. Don't mug up. Deferred tax concept and all, don't mug up. Getting it? We paid higher tax under income tax by declaring higher profit than under Companies Act. Somehow later on, timing differences, temporary differences, it will settle. But from company point of view, why are you declaring higher income? Because under income tax, depreciation is low. You declared higher income under income tax and paid higher tax. So from company law point of view, you paid excess tax. Payment of excess tax means what? It's an asset. So the auditor has to verify deferred tax liability likely to be created. Wrong. The auditor has to verify deferred tax asset likely to be created. That's it. The answer is A. Understood the logic. B. This is an auditing paper, but they are asking accounting questions. Keeping in view description provided in case scenario, which of the following statements is likely to be correct regarding accounting treatment of cost of CDs and software? It's completely to be classified as intangible. The company's accounting treatment of treating CDs as cost of intangible is not proper. That's wrong. The company's accounting treatment of treating cost of CDs with software as intangible is proper. Of course, let's see. They are saying not proper. They are saying not proper. So straight away the answer is B. That's it. As regards discrepancies noticed in computer systems on physical verification by management. As regards discrepancies noticed in computer systems on physical verification by the management as described in case scenario, which of the following statement is most appropriate? Okay, the management has properly dealt all the such discrepancies. However, Dhanu should bring into light of engagement partner as it may result in modification of opinion. This is actually correct. So Dhanush, no, he should say, sir, CARO report we should modify. This is correct. We'll see another option. The management has properly dealt with the discrepancy. However, Dhanush shall bring into light of partner as it entails specific reporting requirement for auditor under Companies Act. This is even more correct. We have to modify our opinion. Where we have to modify? CARO report we have to modify within the part of audit report. Why are we modifying CARO report? Because it's a requirement under Companies Act 143 subsection 11. which is even more correct because it entails specific reporting requirement. What is the specific reporting requirement under CARO for fixed asset? Sorry, Companies Act for fixed asset, CARO 2020, clause number 1. Yes or no? Then the management has properly dealt. Dhanu should not do anything further wrong. The management has properly dealt with that discrepancy. However, Dhanu should bring it to light of partner as it is nature of misstatement, which it is not misstatement at all. The answer is B, because Dhanush has to communicate it to partner because it results in specific reporting requirement under Companies Act. You see, they did not use the word CARO because if at all they use CARO, you will immediately figure out. That's why they cleverly use the word specific reporting requirement under. What is the specific reporting requirement under Companies Act for fixed assets? Clause number 1. So B. Next. Which of the following statement meets requirement of law in respect of revenue from operations? In our exam, in this case, revenue from operations almost 50 crore. Sorry, 50 crore. 10 lakhs is other income. Revenue from operation of 50 crore should be shown in statement of P&L. That is right. We'll see later. Revenue from operations of 50.1. That's wrong. Revenue from operations of 50.1. That's wrong. Revenue from operation 50 crore should be shown in statement of P&L. However, revenue from sale of books, fees charged from students should be disclosed separately in the notes. That is very much right. Even more correct. This is even more correct disclosure requirement. A is correct, B is also correct, but D is even more correct. So option is D. So we show revenue from operation 50 crore, other income 10 lakhs anyhow. Other income point of view, they didn't give correct option anything. So we ignore that. So revenue from operation 50, breakup should be shown from coaching fees how much, from examination fees how much, from sale of books how much, we should show the breakup. Next. The company has taken useful life of desktop to be 3 years. Such a requirement is, this is out of box question. Such a requirement that the company has taken useful life as 3 years for desktop, right? Is that requirement is prescribed under schedule 2. However, a company can choose useful life different from what is prescribed under schedule 3. Wrong. Is not prescribed by Companies Act. Wrong. Is not prescribed by Companies Act. Wrong. See, it is prescribed under schedule 2. Getting it? Under schedule 2 for desktops, no? For desktops, laptops and all, 3 years is a useful life that is recommended under schedule 2. However, a company can choose useful life different from what is prescribed under schedule 2 under some circumstances. So the answer is C. First of all, 3 years is given under schedule 2 for desktop. We also don't know because schedule 2 contains so many rates of assets, single shift, double shift, so much discussion is there. This is something I felt out of box question. But if you observe, no, in this question, I can easily say that prescribed under schedule 3, wrong. It is not at all spoke under Companies Act, that is also wrong. It is not spoke under Companies Act, that is also wrong. Because these 3 are not at all right answers, I selected this answer. Getting it? So it is not that I know this answer. Schedule 2 rates of depreciation, nobody knows. Even audits and all, we also in our practice also, if at all we want to see, we open schedule 2 and see which rate is applicable accordingly. So case scenario 1 is completed. CDL Limited, a company dealing in FMCG goods. By the way, you please check with the answers. I'm not opening the answers. You cross check with the answers. CDL Limited, a company dealing in FMCG goods, is having 50 branches in India. Okay. SKC and Associates, referred to as company auditor, are appointed a stat auditor for the company 23-24. Further, the company has also appointed Mr. D as branch auditor for 5 of its branches. So SKC is main auditor, principal auditor. D is a branch auditor. Since Mr. D is conducting audit of only 5 branches, he has not arrived at materiality level in respect of auditee branches. That's wrong. If you are a branch auditor, you should decide materiality considering branch operations. On the same lines, identification and assessment of risk has not been performed. That's wrong. Branch auditor also shall do risk assessment. He is of the view that determination of materiality, identifying and assessing risk of MMS is done for the financials of the company as a whole. He has mainly performed substantive procedure in respect of financial statements of the branches like verification of plant and property, plant equipment, inventory, trade receivable, cash, bank and balances, trade payables at these branches, auditee branches, and maintained documentation of the same. Okay. During the course of audit at 2 branches dealing in same kind of goods, Mr. D has performed analytical procedures pertaining to inventories. Okay. He has arrived at and compared inventory turnover ratio over a period of over a period of years for 2 branches. For 2 branches, he has done analytical procedure where he specifically did what? Inventory turnover ratio he compared. So what is the cost of goods sold to? What is the cost of goods sold to average inventory? Actual inventory turnover ratio, we don't measure with cost of goods sold. We generally measure with what? Turnover of the company. Yes or no? The results of analytical procedures are as below. We'll see. I think, I don't know whether they tested this or not. Inventory turnover ratio for branch number 1, branch number 2. Okay, for branch number 1, inventory turnover ratio is decreasing. High inventory turnover ratio means what? As and when we are purchasing goods, they are immediately being sold. Higher turnover ratio means higher sales, higher amount of sales are happening. Inventory is being rotated multiple times. Inventory turnover is reduced for the branch number 1. It is reducing year by year. Getting it? Which means sales are reducing. Inventory turnover ratio for branch number 2 is increasing, which means sales are moving much more faster. Fine. The company's auditor has also decided to use work of Mr. D with respect to financial information of these 5 branches, which are included in financial information of the company. Okay, so the principal auditor decided to use the work of branch auditor, SEA 600. During the course of audit, company auditor has advised Mr. D by way of an email certain accounting, auditing, reporting requirements and has asked him to provide representation as to compliance. Remember, we have seen in audit report chapter, branch audit discussion, there is a discussion, principal auditor's procedures. Principal auditor can advise the branch auditor regarding significant reporting requirements, significant aspects to be considered, significant areas to be focused, and the principal auditor can get a representation from the branch auditor whether he has complied with all the requirements requested by the principal auditor. He can. And you see here, irritated and surprised, Mr. D is of the view that such an email is beyond the rights of company auditor. That's wrong. It is recommended under standard. It is even permitted under standard. Branch auditor has to respond to the mail of the principal auditor, has to give a representation to the principal auditor. Fine, we'll see. Based on the above, the answer the following. As regards audit of branch of CDL Limited, as referred to in case scenario is concerned. So audit of branch of CDL as referred in case scenario. Which of the following statement is most appropriate? Which of the following is most appropriate? We'll see regarding audit of branch. The accounts of a branch shall be audited either by company auditor, okay, or by any person qualified for appointment as an auditor of a company and appointed as such under 113 of the Companies Act. Yeah, correct one, In case of branch accounts are audited by a person other than company auditor, branch audit report is sent by branch auditor to company auditor. Very much correct. We'll see next. The accounts of branch shall only be audited by any other person. That's wrong. Branch auditor, who can be a branch auditor? Company auditor himself can be a branch auditor, or another person who is duly qualified to act as an auditor of a company. Nothing but a chartered accountant having COP can be a branch auditor. If a branch is situated outside India, either company auditor or another CA or auditor as per the laws of that country. Anybody can be doing audit. The accounts of the branch shall only be audited by any person. That's wrong. The accounts of the branch shall be audited either by company auditor or by any person qualified appointment as an auditor of a company and appointed as such on 139. In case of branch accounts are audited by a person other than company auditor, branch audit report is sent by branch auditor to members of the company. That's wrong. We know branch auditor has to first send the report to company auditor. So after reading the four options, I felt A is most correct. A. After reading methodology for carrying out branch audit by Mr. D, like what he did, materiality he didn't calculate, as a risk assessment he didn't perform. Which of the following statement is likely to be the most appropriate? Separate determination of materiality and identifying assessing risk of MMS is not required. Wrong. Separate determination of materiality and identifying assessing risk of MMS is required in respect of each branch. However, documentation for these matters is not required. That's also wrong. Documentation is also required. Whenever you do risk assessment, whenever you determine materiality, you need to document. Separate determination of materiality and identifying and assessing risk of MMS is required along with the documentation thereof in respect of each branch. This is correct. We'll see. He is required to perform substantive procedures as described in case scenario in respect of auditing branches and also maintain documentation. I think all the points are correct. We'll see D answer. Identifying and assessing risk of MMS is required along with the documentation in respect of each of the branches. However, materiality should be arrived at whole. That is wrong. He is required to perform substantive and also maintain materiality. When branch auditor is performing branch audit, materiality at branch level he will decide and give opinion as on the branch as per that. Now that report company auditor will be receiving it, right? He will check what qualifications he made and he will cross verify with as a whole financials and consider is it material or immaterial. I told this in audit report topic. So C, option C, I felt not option C. Which one? Determination of materiality. is required in respect of each of the branches. However, documentation is wrong. Okay. C only correct. Where materiality, risk assessment and documented. Substantive process also should be documented. That is what. So the answer is best conveyed is the best, which option C has best conveyed the actual answer. Choose the correct statement regarding results of analytical procedures performed by D. Okay, analytical procedure. So what happened during the 23-24? Inventories of branch 1 have moved faster in comparison to branch 2. We'll see. Inventories of branch 1 have performed in 23-24. In 23-24, only 23-24 they are asking. Don't compare with other years, okay? In 23-24, inventory of branch 1 has moved faster than branch 2. They said, yes, correct, no. Inventory turnover for branch 1 is higher for that year, only for this year. Don't check previous, ma. Look at the question. During the year, inventories of branch 1 have moved faster in comparison to branch 2. For 23-24, branch 2 turnover ratio is 10, whereas branch 1 12 times rotated. So obviously the statement is correct. We'll see remaining also. During the year 23-24, inventories of branch 2 have moved faster. That's wrong. Comparison of inventory turnover ratio of branch 2 over a period of years may indicate that branch sales have been weak. No, branch 2, if you remember, 4, 6, 10, inventory turnover increased, sales have increased. So, like weak with higher inventory holding, that's wrong. Inventory is moving much faster, that is wrong. Comparison of inventory turnover ratio of branch 1 over a period of years, branch 1, if you see, 15, 12, 10. Sorry, some number 15, 14, 12. It is decreasing actually. May indicate that branch sales have likely been stronger with lower inventory. No. As compared to previous year. Lower inventory, just a minute. So for branch number 1, inventory turnover ratio is decreasing. Decreasing means inventory turnover decreasing means whatever inventory we are buying, it is being sold slowly. Means inventory holding is increasing. Correct? Huh? Now what is the option D? It says ratio analysis question. Comparing branch 1 turnover, inventory turnover over a period, it indicates that sales have been stronger with lower holding. That's wrong. When inventory turnover ratio of branch 1 decreased, inventory holding increased, sales decreased. So this is wrong, this is wrong, this is wrong. And since all the three are wrong, option A is absolutely right. And even if you look at branch 2, branch 1, only for that year, if you see, branch 1 has a turnover ratio of 12 times, whereas branch 2 has a 10. So branch 1 turnover inventory has moved faster than branch 2. I hope you understood the logic. This is a financial management. If you're good at financial management, this is Suzuki. Next. Considering contents of email sent by company auditor to branch auditor, which of the following statement is likely to be in accordance with the standards on auditing? Company auditor can advise Mr. D regarding certain significant accounting and ask him to provide representation. Absolutely, he can ask. Company auditor can advise D. However, asking to provide representation is, that's wrong. Breach of independence. No, that's not correct. Company auditor can ask. Company auditor cannot advise. Company auditor can advise regarding certain significant matters and reporting requirements only when Mr. D. That is also wrong. Option A is correct. Absolutely. When we read the first option itself, I felt it is absolute answer. Yeah. Next. Case scenario 3. CAB is conducting statutory audit of a branch of a nationalized bank. Okay? Saurabh, a CS student, is also part of the engagement team conducting branch audit of the bank. The field of the bank branch audit is new to him. Okay, for article, no, doing a branch bank audit is new for him, and he is following instructions as required by. So partner gave some instructions, he's following. Good. The engagement partner has asked him to prepare a summary of non-funded credit facilities outstanding as on balance sheet date. What do you mean by non-funded credit facilities? Suppose if a bank gave a guarantee, money has not flowed. Funded means outflow should be there. Getting it? So, but here, if I gave a guarantee, if a bank gave a guarantee on behalf of customer to some third party, I just gave a guarantee, which is a contingent liability. It is not a funded. Giving a guarantee to customer is also a kind of a loan and advance to customer, but it's treated as non-funded because there is no movement of fund. The following information is appearing in the branch core banking solutions data, CBS data or records. Okay, so let us see. Agricultural term loans. So this is funded, ma. Staff housing loan funded, vehicle loan funded, housing loan general public funded, letter of credit issued non-funded, education loan is funded, guarantees issued not funded, bills purchased and discounted is also, bills purchased and discounted means obviously money will go na, funded. Bills for collection, it's actually non-funded. Here first of all, bills for collection do not come under credit facility at all. Bills for collection is not a credit facility. First of all, sorry, it's not a credit facility at all, because customer gave me the bill, I will send to the other party. If at all collection happened, I will get commission. So commission amount is there. That is not about a credit facility at all. Bills for collection is not a credit facility, whereas bill purchased and discounted is a credit facility. Next. On going through listing of housing loans to general public, CAB notices that branch has sanctioned many housing loans of small ticket size ranging between 10 to 20 lakhs. There are many housing loans between 10 to 20 lakhs. Therefore, he assessed risk of MMS to be high. Naturally, good. As a consequence, he has designed procedures to perform test of controls as well as substantive. Good. Saurabh has been further asked to go through special mention accounts jotting as on 30th November 2022. Special mention accounts means what? If there is an overdue, it's treated as special mention account. Such reports are available from systems on monthly frequency. Being new to such type of assignment, he is unable to understand relevance of the above. Why special mention accounts have to be seen? What is the relevance? To decide NPAs, to decide potential non-performing asset. That since he's new to the field, he don't understand that it's a potential non-performing asset. Fine. Based on the above, answer the following. Considering timetable given in the case scenario, considering table given in the scenario, which of the following combinations is appropriate example of non-funded credit facilities provided by the branch to its customer? What are non-funded? Bills purchased and discounted is funded. Bills for collection is not at all. First of all, it is not at all a credit facility. Staff housing loan is funded. It is funded. Bills purchased and discounted is funded. They are asking an example of non-funded. Letter of credit, non-funded. Guarantees issued, non-funded. So answer is D. I hope you understood the answer. D. You understood why we selected D. CAB, decision to perform both the test of control as well as substantive test was taken after he has assessed risk of MS in financial statements to be high due to large number of small sized loans. Which standard on auditing deals with auditor responsibility to design those tests? I already told documentation chapter introduction. I told items of financial statement. I said, sorry, in items of financials, I told somewhere when if at all you're listening to the marathon or even the regular class, many places I told, especially in risk assessment, I told SA 315 dealing with risk assessment. Based on risk assessment, you plan further audit procedure, response to assessed risk. Further audit procedure is what? Compliance procedure, substantive procedure. So this is a requirement of 330. So the answer is 330. Saurabh is unable to understand relevance of going through SMA, special mention account, as of 30th November. Which of the following statement is most appropriate? Why SMA account has to be gone through? It is necessary help him auditor identifying account with significant. No, not that. It would help the auditor in identifying accounts which may involve downgrading from substandard asset category. No. Substandard is already NPA. It would be help in auditor identifying accounts where substantial recoveries have been received. No, that is also not. It is help the auditor in identifying accounts which may involve downgrading from standard to NPA. Yeah, potential NPA it will show. So originally it's a standard asset. Since it's an SMA, it may downgrade it to NPA possibility. So the answer is D. That's it. So standard MCQs. We the people is an NGO working for rights of the citizens. Due to nature of its activities, its volunteers take part in agitations which acquire political overtone. Okay? It also gets money from trust based on overseas country. The government has tightened regulatory mechanism for NGOs receiving foreign funding. The finance and accounts departments in NGO is headed by an experienced person, a former volunteer and activist himself. Okay? However, he has no professional, no legal educational background. Okay? CAN is appointed as an auditor of the above NGO for the first time. Choose the most appropriate option regarding audit risk inferred by you from the above. So from this, what is the audit risk that you felt? Okay, let's look at the answer. Sometimes when you read the question, you will not get. Audit risk and the situation is low. We'll see other answers also. The situation does not provide quantitative data. Therefore, it is not possible to make a precise measurement of audit risk. When you read for the first time this question, you will feel this option is much more better. Audit risk in the above situation is high. The situation does not provide information affecting all components of audit risk. Therefore, inference cannot be made. So from the situation, since information is not fully, so we cannot make any audit risk analysis. That's what they're saying. But they have given a clue. The finance and accounts department is headed by an experienced person who does not have any professional legal education background. Finance things and all, how come you do without an educational legal professional background? How come you handle? Now remember, we have seen financial statement level risk. If you recollect, financial risk assessment chapter we have understood. Risk is assessed at two levels: financial statement level, assessment level. But suppose if the company top management is not competent, or if the company finance department people are not competent to prepare the accounts, there is a possibility that in every aspect of the financial statements mistakes might happen, because they don't know anything about accounting. Here, finance head of the entity has no professional legal background. How do you think he will account all foreign donations legally, whether they are all proper, or how do you think he will head this? It's a financial statement level risk. It's a financial statement level risk. When financial statement level risk is there, we generally say it as audit risk is extremely high. So that's why audit risk is low. Wrong answer. The situation in the above is audit risk is high in the above situation because it's a financial statement level risk. The answer, reason is more important. Okay, in MCQ answer is given. See, why that answer? Because financial statement level risk. What is financial statement level risk? Here, the accounts finance department head is of having no knowledge. Because he's not having knowledge, there is a possibility that entire NGO related accounting, finance related affairs might contain material misstatement on every area. So audit risk is extremely high. So I selected answer C based upon this logic. Next. CAJ is in process of planning audit of large company engaged in business of dealing and manufacturing pharma products. Okay? Pharma company audit. In fact, if you recollect, when I'm discussing, many provisions, I discuss pharma company provisions also sometimes. Central Drugs Standard Control Organization, National Regulatory Authority under Ministry of Health and is responsible for. Okay, so CDSCO is something that is responsible for drug approval. They are conducting clinical trials and laying down standards for drugs and control over quality of imported drugs. Okay. Auditor is considering whether to make use of audit evidence obtained in previous audit of the same company. Okay. Besides, is also considering volume of the transaction to determine whether it is sufficient to rely upon internal controls. Okay. As a part of planning activity, he is also considering extent of substantive process to be performed. Considering the following factors stated from 1 to 5. Okay, they have given below. Reporting requirements required by CDSCO, if any. Need for specialized knowledge of pharma industry. Expected use of audit evidence obtained in previous audit. Volume of transactions to consider reliance on internal control. Nature and extent of substantive procedure. Okay, I'm still not clear. Choose the most appropriate factor or combination of factors which could be relevant to CAJ in establishing. Now the question got. While establishing an audit strategy, which of the following 5 in the above 5 points are there, which of them are relevant in establishing overall audit strategy? Reporting requirements, that is important. Whether is there any need for specialized industry person, that is important. You see, in our audit strategy chapter, what are the points auditor has to consider while establishing overall audit strategy? We have given certain points: relevant industry knowledge, reporting requirement. Like that, we have given some 4-5 points. Preliminary result of preliminary engagement activity. Like that, we have given some points. Inserted sub points were there. These sub points will find. Reporting requirement under the regulatory. Is there a specialized knowledge? We should consider this because only, see, I'm doing audit of pharma company. If I don't know about audit of this, I need to have a knowledge of an expert. So who can help me to audit better? So while formulating strategy itself, I should consider expected use of evidence obtained in previous audit. I will be using previous audit evidence also while formulating strategy. Volume of transactions. So what is the total quantum of transactions that is happening so that I can strategize my audit better, strategy related. So 1, 2, 3, 4, 4 I'll use. Substantive procedure is the next thing. Nature and extent of substantive procedure is something that will help me in audit planning. While planning the audit, I decide about this. So 1, 2, 3, 4. The answer is 1, 2, 3, 4. The answer. So option C. CA Tarini is in process of formulating audit plan for conducting audit of a company engaged in business of dealing in commodity futures. Okay. Which of the following is not likely to be an appropriate audit procedure to be included in audit plan for the aforesaid company? So turnover, verification of turnover of the company, we of course verify turnover. Verification of raw materials consumed, commodity futures, examination of accounting policy for revenue recognition, verification of contract notes. Not which of the following is not likely to be an appropriate? Verification of cost of raw material, obviously it's a currency futures, futures options, futures options, not stock market related, currency market related. Raw materials and all, why will I verify here? Raw materials won't be there. So option B. Contract notes I will verify, revenue recognition I will check, turnover of the company I will check. That's it. So B is something not likely to be an appropriate audit procedure. That's it. Which of the following is not likely to be an appropriate audit procedure which is to be included in audit plan of the aforesaid company? So turnover, cost of raw material I will not check. That's it. I will once check MTP this. Yeah, correct only. Yes. B, correct only. Answer is correct. That's it. So with this, MTP 1 is completed. So let's continue with MTP 2. You please cross check the answers, whatever I have told. Whatever answers have come, whatever answers I've covered, please cross check. Very, very important. Just a minute. Yes. Let's proceed to MTP 2. Case scenario. Pluto Limited is engaged in manufacturing and distribution of ergonomic furniture. Such a kind of customizable range of home office furniture has gained a lot of importance in the past few years. The company was able to perform well over the years and same is reflected in their financials. During the year 23-24, audit firm SJ and Associates was reappointed. They were reappointed as their auditor. The engagement team consisted of CS Neha, the partner, and 5 article assistants. One of the assistants was new to this audit, new to this engagement. Considering huge volume of transaction, the partner asked him to go through files of last year and auditor's report to gain an understanding of the issues which arose in the last year. Of course, that's what we tell our articles. In fact, when we were in articles, that is what we told. That is what we were told, to go through the last year files to get an understanding of the entity, what they're doing, all that. While going through the summary page of the file of the last year, he noticed that below points were under discussion with the partner before audit finalization. Okay, so last year related. For employee benefit expenses, following points were verified by the team in the last year. The employee benefit expenses shown in the books were actually incurred during the relevant period. Yes, you need to check. Whatever expenses they recorded, are they incurred? The expenses in respect of all personnel, all the staff related expenses accounted. Okay. The expenses recognized related to this year only. So whatever expenditure they debited, is it related to that year only? So these 3 points were verified by previous year audit team. Okay. It was noted that, another point, it was noted that dividend to equity shareholders for the year 22-23 was declared on 15th April. As dividend related to 22-23, the same was recognized as liability. Since it is related to 22-23, they recorded as liability. No, it must be disclosed. Yes or no? It must be disclosed because declaration is after 31st March. Debtors constitute one of the major components of the company financials. Okay. As a part of audit procedure, verification was made whether company had made allowance for these debtors which were doubtful. So whether company has created provision for debtors or not, they verified. In this regard, list of debtors under litigation was also obtained and scrutinized. So they verified. Fine. Okay. Point number 4. Oh, another point. Assets additions during the year amounted to 50 lakh. The payment in respect of these assets were made through bank of the company. However, on scrutiny, it was found that some invoices were not in the name of the company, but in the name of the directors. Okay, some assets were purchased in the name of the directors. Fine. Another point, point number 5. The company was maintaining few bank accounts, including one foreign currency account. There was included in previous year file, a paper converting foreign currency amount held in bank into Indian rupees at closing rate. Oh, in the previous file, conversion related workings also he saw. Okay. Based on the above, in point number 1, relating to employee benefit expenses, which of the following assertions are discussed respectively in the same order? Like 4 assertions were the valuation, occurrence, and cutoff and completeness. Which assertions they discussed? Order is very important. The employee benefit expenses shown in the books were actually incurred in the relevant period. Occurrence. It's an occurrence. Whether expenses recorded are belonging to the entity, yes or no, are they relevant? The employment were they actually incurred? Are they actually incurred? Are they really existing? Are they existing? Occurrence. Expenses for all employees, completeness. Whether the expenses are related only to the year, cut off. So 3 items: occurrence, completeness, cut off. These 3 were verified, respective order: occurrence, completeness, cut off. Look at this: occurrence, completeness, and cut off. Yes or no? So first he verified this, second he verified this, third he verified this. So 2, 4, 3. 2, 4, 3. That's it. The answer is over. This way also they can ask. You see how clever they asked. There is a high chance that students get confused. Choose the correct combination below. 2, 4, 3. They verified 2, 4, 3. You see here 2, 3, 4. 2, 4, 3. Both are correct only. Even BC also correct. But actually order is what? First he verified occurrence in the 3 points if you see. Then he verified completeness. Then he verified cutoff. Yes or no? These 3. Second point 4, 3. Getting it? Just because in D also 2, 3, 4 is there, don't confuse. Some students there's a possibility they'll tick D. This is the order in which the points were drafted above in the case study. Point number 1. Do you think the amount of dividend recognized as liability is appropriate? No. No. Oh, 3 no's were there. So we need to see. The amount should be recognized equally. No, that's wrong. The amount should not be recognized as liability, but it needs to be disclosed in notes to accounts. That's correct. The amount should not be recognized. Further, no disclosure is required. So answer is C. It should be disclosed in notes to accounts. In relation to matter given in para number 3 pertaining to debtors, which of the following assertion was verified by the debtors? In debtors, now what are we verifying? We are verifying provision is created correctly or not. Valuation we are verifying. The answer is valuation. In point number 4, choose which assertion is not provided, not proved in this case. Point number 4 is what? Additions. So company purchased machines and there were bank amount payment and all there, but it is not in the name of the company. Means ownership related information we did not get. So existence is proved. Rights and obligation. The answer is rights and obligation. In 1.4 the answer is rights and obligation. Choose the correct statement from the below pertaining to matters described in point number 5. Point number 5 is what? Accounting standard related foreign currency, foreign exchange. Okay. What we need to check? The company was required to restate the said amount in accordance with S1. That's wrong. The company was required to restate a said amount in accordance with the requirement of AS11. By verifying it, the auditor has verified completeness. No, not completeness. Whether the company has converted foreign currency into Indian currency at closing rate. We verified valuation part, ma. Yes or no? There was no responsibility for the company to restate. That's wrong. The company was required to restate the said amount in accordance with AS11, which is correct. By verifying it, auditor has verified valuation assertion. Whether the closing valuation of foreign currency is correct or not is what we verified. So D. So easy. Then case number 2. Watch IT India Private Limited is a company engaged in business of manufacturing smart watches. Okay, it's a watch manufacturing company. The company had a slow start in the beginning as the company's products were gaining traction with the customer. So initially there is a slow growth. However, momentum has picked up during the year. Okay, sir, growth is started. The growth. The company wants to appoint Messrs. Tripathi and Associates, a CA firm, as their auditor for 23-24 by replacing their existing auditors, Mr. Sripath & Co. Okay, so they want to replace the Sripath and appoint Tripathi. Tripathi Associates are willing to accept the engagement. They communicated with previous auditors before accepting the engagement, which is professional courtesy. However, Sripath & Co. have failed to respond. You know, the outgoing auditor has to respond to the incoming auditor. It's a professional behavior. CA Kishan, a partner of Tripathi Associates, explained to his team members about importance of engagement letter. Correct? He also arranged a team discussion on matters relating to acceptance of terms of engagement. Okay. First point of consideration was concerning preconditions for an audit. Yes, Mr. Arjun, a team member could recollect a few of them. What are the preconditions to audit? Acknowledgement that financial statements are, whether the financials are prepared in accordance with the applicable framework. Management is responsible for design and implementation of internal control so that the financials are free from material misstatement. Management is responsible to provide the auditor with complete access to information, records, additional information, unrestricted access to people. Over. Those included determining whether financial reporting framework used in preparation of financial statements is acceptable. One of the precondition. Management providing auditor with access to all information, additional information upon auditor request. It was further elaborated by Arun that management has to provide unrestricted access to employees within the entity as may be required by the auditor for, yes, correct. Team members were asked to list factors that may necessitate revision of engagement letter in case of recurring audit. Yes. So partner will ask him, hey, what are the cases? Engagement letter has to be reissued, recurring audits. Kumar, another team member, replied that revision may be required in cases of significant change in ownership. Yes. Recent changes in senior management. Yes, we should reissue engagement letter. Changes in financial reporting framework adopted in preparation of financials. Yes, we should issue engagement letter. Modest change in nature or size of the business. No, if there is a significant change in the nature and size of the business, only we have to issue engagement letter. Modest change, why will issue? Next, change in legal regulation. Yes, we issue engagement letter. Oh, still there. Mr. Ram, one of the team members raised a doubt. He inquired regarding recourse available to incoming auditor in case management makes it clear before acceptance of the engagement by auditor regarding its inability in providing support to him in respect of certain procedures. Sorry, one second, I'll read. Mr. Ram, one of the team member raised it down. He inquired regarding recourse available to incoming auditor, means new auditor, in case management makes it clear before acceptance of engagement by auditor regarding its inability in providing support to him in respect of certain procedure expected to be performed during the course of audit. Before accepting audit itself, management is saying some evidence and all I can't provide while you're doing audit. Limitation on scope of the auditor prior to the acceptance of the audit. You should not accept the audit. In this respect, specific question was raised relating to sending confirmation request to material trade payables reflecting in financials of the company. So regarding this, it's about a trade payable. Company said company cannot cooperate. Trade payables pertain into material input services acquired and utilized by the company during the year. Lack of support by the management in such a case would in effect signify management refusal to allow the auditor to send confirmation request at the outset before. So auditor, no, if at all going further, he have to send a confirmation request to creditors. But management at the beginning itself saying no. Before accepting audit itself, management is restricting. Audit should not accept the audit. We'll see. Based on the above. As regards doubt of Ram, described in the last para. Okay, just now we read. Which of the following statement is likely to be in accordance with the standards on auditing? Okay, the auditor need to inquire management's reason for refusal and perform alternative. First of all, auditor before accepting itself, they said the auditor needs to evaluate implications of the management refusal on assessment of risk of MS and perform alternative. That's wrong. The auditor should not accept the audit before accepting an audit. If at all management imposes a limitation, the auditor shall not accept the audit. That's an SA 210 requirement. When CA Kishan, the partner, asked about preconditions for an audit, Mr. Arun could recollect only few of them. Read the passage, once again you read and find out which of the following points were missed. Obtaining management responsibility on specific legal aspects, that is not required. Obtaining management responsibility on standards not required. Obtaining management responsibility for preparation of financial statements as per applicable financial reporting framework, that is correct. But that is already said no. He said no. Management is responsible whether financial reporting framework used in preparation is acceptable. That is correct. He already considered that. He considered that obtaining management responsibility on necessary internal controls to enable presentation of financials which are free for misstatement whether due to fraud or error. Which of the following points were missed? So this point only missed actually. Even I think if you see obtaining management responsibility for preparation of financials. Yes, management should accept responsibility for preparation of financials. Yes or no? Here you are saying, here those include whether financial reporting framework is acceptable or not, you check. Then you will get an acknowledgement that management is responsible for preparation of financials. You will get an acknowledgement that management is responsible for design and implementation of internal control for the preparation and presentation of financial statements. So 3 and 4. 3 and 4. I will go with 3 and 4. Because Precondition to audit: management should acknowledge and accept its responsibility for preparation and presentation of financial statements as per applicable framework, which is acceptable. So here he said whether financial reporting framework is acceptable or not, he told, but management is responsible to give acknowledgement of that. He did not tell. And of course, management is responsible for controls also. That's it. Just to go back, just to go 5 minutes before, I told very clearly this point. From what Mr. Kumar replied about factors requiring revision of engagement letter, one point was incorrect. Read the passage. Modest change in nature of the business, no need to give engagement letter. D. Mrs. Sripath & Co. has failed to respond to incoming auditor. In this regard, choose the most appropriate. They failed to respond, right? It was unethical on the part of outgoing auditor for failing to respond to communication made by income. It is a violation of principle, objectivity, and no, that's not correct. It was ethical, no. It was unethical on the part of outgoing auditor for failing to respond to communication made by incoming auditor. It is a violation of principle of professional competence, wrong. It was unethical on the part of outgoing auditor for failing to respond to communication made by incoming auditor. It's a violation of principle professional behavior. Yes, correct. D. Over. Case scenario. Case scenario 3. Just a minute. Yes, next. Case scenario 3. In accordance with requirements of standards on auditing, CA Tina, a freshly qualified personnel, wants to obtain sufficient appropriate evidence in an audit engagement pertaining to financial statements of a partnership firm for the year 22-23. So she was doing an audit of partnership firm. The firm is trading in FMCG goods. Okay. Appointed in May 2023. So for 22-23 year, she was appointed in May 23, which means after year end she was appointed. Fine. She needs evidence to obtain information for arriving at her judgment. Clearly remembering fundamentals that an auditor has to obtain sufficient appropriate evidence to draw reasonable conclusion on the financials, she proceeded in accordance with an audit plan prepared by her. Okay. During the year 22-23, the firm was maintaining a current account with a branch of a public sector bank. Her audit plan had included procedure for confirming balances of current account directly from the bank. As of 28th March, the firm had an urgent need to pay its utility bill amounting to 1 lakh. However, due to insufficiency of funds, it has requested the branch manager to get check drawn on the utility of the company and cleared. Some OD facility might have been there. Therefore, balance in current account of the firm stood at 0.92 lakh debit. So, which means 92,000 debit balance has been, the actual balance is turned into debit. The firm had also issued checks in the evening, 31st March, in anticipation of the funds on the next working day, that is 3rd April. Okay. It had also certain checks dated 27th March from the debtors lying with which it was deposited in the afternoon 3rd March in the bank branch at the request of the debtors. Okay. Her plan also included performance of certain procedures regarding verification of inventories. Inventories of FMCG goods were material to the financials. Her assistant, Trisha, had her own notion about understanding of sufficient appropriate evidence. She further feels that when audit evidence is obtained from available records of the entity, it is known as internal evidence, like purchase bills of FMCG. Purchase bills of FMCG is an external evidence. If a firm is purchasing goods from third party, like our entity is purchasing goods, no purchase bill we get. That's an external evidence. Debit notes issued by the firm. This is internal evidence on debtors for GST short charge. Suppose we sold goods, but we charge lesser GST, so we raised a debit note. That's an internal evidence because we prepared it. And credit notes issued by the firm. We issued credit notes, which we prepared and issued. That's an internal evidence. But purchase bills are not internal evidence. Credit notes issued by the firm on debtors to the extent of extra price charged in respect of GST law. He is also view that audit evidence obtained by auditor is final and conclusive. No, the evidence which we obtained is persuasive, convincing. Our evidence is never conclusive. So what she feels, Trisha, is wrong. As regards matters of balance in current account and related issues is concerned. As regards matter of balance in current account and related issues is concerned, which of the following statement is likely to be most appropriate? Current account balance. Amount of 92 lakh is required to be classified under cash and bank balance. No, that's actually a current liability. It turned into OD. Amount of 92 lakh is required to be classified under cash and no. Amount of 90,000 nothing but is required to be classified under current liability, which is correct in the financials of the firm. Procedure for confirming balance directly from the bank alone is likely to constitute, that is also wrong. Only evidence from bank is not enough. 92 is required to be classified as current liability. Procedures of confirming balance directly from the bank alone is not likely to constitute sufficient. It alone is not sufficient. So D. Only confirmation from bank alone is not sufficient. You need to confirm bank balance. You should also see whether BRS and all also you should see for confirming bank balance. So this alone is not sufficient, and of course it's a liability. So the option is D. Considering matter of verification of inventory, which of the following statement is based on the fact described in the situation and also the essence of the standard auditing? Considering the matter of verification of inventory, which of the following statements is based on facts described in the situation and also the essence of the standard? Inventory point, what she said, purchase bills are also internal. No. She should verify subsequent sale invoices of inventory items lying in the stock as at year end. Besides, you should also review stock records of the 20 to 23 and subsequent period. Such evidence may constitute sufficient appropriate audit evidence. Okay, I think this is correct. I felt she should verify subsequent sale invoices for, because no, she was appointed after 31st March. Remember, she was appointed after 31st March. May month she is appointed. So she should verify whether closing stock as on 31st March is correct or not. She should verify subsequent sale invoices of inventory. Subsequent sale invoices of the inventory, so that will prove that inventory is existing. Besides, she should also review stock records of 2023 and subsequent periods. Such evidence may constitute. Okay, we'll see. She should verify subsequent sale invoice of the inventory items lying in the stock as at year end. Besides, she should also review stock records of 2023 and subsequent period. She should attend physical inventory count at the year end in the above situation. No, that's not possible because she was appointed in May. She should verify purchase invoices of the inventory items lying in the stock as at year end. No. How will you verify purchase invoices? Stock records are not required to be verified. Such evidence is likely to constitute. That is wrong. She should verify purchase invoices of inventory lying in stock as at year end. She should attend physical inventory counting at year end. That is wrong. Such evidence may constitute sufficient. Okay, fine. Just a minute. See what she want to confirm. She want to confirm whether closing inventory value is correct or not. But she was not appointed at then. Whether that inventory closing value, whatever is there, is it really existing or not? We want to know. How do we know whether it is existing? I think here two items for this. She should verify purchases invoices of inventory items lying in stock at the year end. Stock records are not required to be verified. Such evidence is likely to constitute. Records are also to be verified. She should verify subsequent sale invoices. So as on 31st March, if stock is there, that only we can be sold. In April beginning, if at all we sell some goods with the sale invoices, that indicates that stock is there. That is correct. Actually, for closing stock, purchase invoice also we should verify. That is also correct. C answer also correct. But stock records need not be verified. They said, no, that is wrong. She should review stock records. This is also correct. Okay, and subsequent period, of course. Such evidence may constitute. Yes, I feel A is even more accurate. B is also correct, but in B, no, this part is wrong. That's why I did not select, sorry, C. C I did not select. A I selected. And B, why I did not select? She should attend physical inventory counting at year end, they said. She was appointed only after 31st March. How come she attended year end? So that's why B I have not selected. So A is correct. So tricky. This question I felt tricky among all the questions. Identify correct statement on the basis of description provided in the case scenario. Oh, what? Purchase bills of FMCG goods, debit notes issued by the firm, and credit notes issued by the firm are all examples of internal evidence. Wrong. Purchase bills of FMCG, debit notes issued by the firm, credit notes issued by the firm are all examples of internal evidence. Wrong. Only debit notes issued by the firm and credit notes issued by the firm are examples of internal evidence. Is correct. Audit evidence obtained by auditor is persuasive. This is absolutely correct. Only debit notes issued by the firm is an example of internal. No, even credit notes which we issued. What is internal evidence? Any evidence, any document that we created. Our audit, our client who created. Here firm is the client. Firm only created debit note. Firm only created credit note. Purchase bill is not. Purchase bill third party will give. So the answer is C. Evidence is persuasive. Remember, C is the answer. Next, normal MCQs. CAD, during the course of audit of company engaged in export business, notices that credit facilities was taken by the company during the year from a bank for 10 crore have almost been fully utilized during the year. On going through the sanction letter provided by the bank, it is observed that rate of interest in the sanction is 8% per annum. The financial statements of the company show bank interest is 60 lakhs only. Array, 8% on 10 crore means 80 lakhs, but financial statements are 60 lakhs only. Which type of substantive analytical procedure he is using? He is using reasonableness test. You see reasonableness test example, application of interest rate on bank, that also you'll get interest rate. So it's reasonableness test. It's not ratio analysis. Turnover ratio, P ratio, these are all ratio analysis. So this is reasonableness test. Applying rate of interest on the loan outstanding is equal to what is the amount of interest, expected value. Look at the actual interest recorded. With the difference we should investigate. So the testing method is reasonableness test straight away. So C is the answer. An auditor of a company has found that accountant of the company has entered bogus purchase bills of 50 lakhs in the books. Okay, which of the following is most appropriate regarding auditor's duty as regarding reporting is considered? Bogus bill, fraud for less than 1 crore. If there is a fraud for less than 1 crore, we have to report it to the board of directors. If the fraud is for more than or equal to 1 crore, then we should report it to central government. Report the matter to ROC, not required. Report the matter to MCA, not required. Report the matter to board of directors. That is correct. Since the fraud amount is less than 1 crore. During the course of an audit of a company, it is noticed by auditor that profit before tax of the company is 5 lakhs. So the PBT is 5 lakhs. Depreciation on building reflected in schedule of PPE forming part of financial statements has been computed at 10 lakhs. The correct depreciation according to him should be 25 lakhs. The above description as a whole is an example of assertion sampling, but there is no, it's a misstatement. No, as per auditor, depreciation is 25 lakhs, whereas company recorded only 10 lakhs. So which is a misstatement according to auditor. So the answer is yeah, that's it. So MTP 2 MCQs are also over. Till now we have completed 30 MCQs. 30 MCQs. Next, 30 MCQs means approximately 60 marks. 60 marks multiplied by 1.8 minute. 108 minutes. 108 minutes means almost 1 hour 40 minutes. So 30 marks MCQs we completed. So for each mark, 1.8 minute time available. So 60 marks of MCQs multiplied by 1.8, 108 minutes divided by 60, 1.8 hour. But we completed within 1 hour itself all the 60 marks MCQs. Actually for 30 marks 1 hour time. But 60 marks worth of MCQs we covered within 1 hour. So we are relatively fast in interpreting. Then finally come to RTP related MCQs. RTP related MCQs. Once we finish this, it will be over. Case scenario 1. DS & Co. MTP 2 we covered, MTP 1 we covered, and now RTP. DS & Co, a chartered accountants or stat auditors of SAR Limited, private limited, it's a private company, a company engaged in manufacturing since 2018. The company is operating from rented premises and it does not have a own building. It has upgraded its machinery last time in 2020. Okay, 2020 only last time they purchased some machinery. Except interest in this company, promoters, directors, key managerial persons and their relatives do not have interest or ownership in any other entity. So all the key managerial related parties, they only have interest in this company. They don't have any other companies. Also, the company does not enter into any business dealings with promoter, director, key managerial person and relatives. Good. The directors and key managerial persons get only reasonable remuneration from the company. Okay. Though the company has an internal control system in its place, it has not appointed internal auditor. Okay. It is also not mandatorily required to take such appointment. Okay, company mandatory 138 section also do not apply, so they didn't appoint. DS & Co have accepted audit of the above company for the 20-23 year for the first time. It's an initial audit engagement. Promoters and directors of the company are known to engagement partner only socially for quite some time. Socially, they know auditor and they appointed. Nothing wrong. However, it is for the first time that any type of work related to this company has been accepted by them. So DS & Co accepted for the first time only this client. It's a new client. While formulating audit plan for the company, CAD has planned certain risk assessment procedure, further audit procedure consisting of test of control and substantive. Yeah, correct only. He can do. The following is the extract of financial information of the company. So turnover they have given, inventories they have given, property plant equipment they have given, net block value, gross block value both they have given, gross profit they have given, trade receivables. If you observe now, plant and machinery, it is same. Net block value has been reduced because of depreciation, all that probably. Getting it? See, the plant and machinery, it is same, especially gross block value, which means there is no additions during the year. But you see the turnover of the company has doubled. The turnover of the company has been doubled. So there is a high risk involved in this company. Getting it? With the same plant and machinery capacity of last year and current year, how come the turnover can be double? Getting it. Inventory has also been increased a lot. Even gross profit also has almost 70% is increased. Trade receivables have increased a lot. In spite of same capacity, all items of the financials are increased. It's a high risk. We'll see. The PPE items consist of machinery only. While planning procedures in respect of PPE, the auditor has included audit procedures like inspecting and reviewing companies' plan for performing physical verification of PPE, assessing depreciation method used, verifying cost of PPE acquired during the year with the purchase bills and recalculation of depreciation. Verifying cost of PPE acquired during the year. What they acquired? Last year PPE, this year gross PPE, both are same. So verification of cost of PPE acquired, why it is required? They didn't acquire anything, no? Why you are planning that? Further, while performing risk assessment process to identify risk of MMS in financials, engagement partner has come to notice that there is a considerable variation in gross profit ratio as compared to last year. Yes, we have seen gross profit ratio is considerably varied. See, business can increase. Business can increase, turnover can increase, everything can increase. How come gross profit ratio can increase so much? Because all are variable income, variable expenses. Gross profit should also be more or less similar, right? It's a high risk, yes or no? During performance of substantive procedure, he has also studied data of purchase and sales of the company during the year under audit and has also compared such data with the preceding years and early years. Okay. Based on the above, answer the following. Keeping in view description provided in the case scenario, which of the following statement is most appropriate? Engagement partner is known socially to promoters and directors of the company. The situation mandatorily involves advocacy. That's wrong. Just because I know them socially doesn't mean it. They said occasionally, very clearly. Engagement partner is known socially to them. The situation involves familiarity threat. No, familiarity threat arises because of the long-standing relationship. Advocacy threat also will not arise because the auditor is for the first time accepting this relationship. Where is advocacy threat? The situation reflected may not constitute threat to independence. Irrespective of this, detection risk is low. Detection risk is higher. Audit risk is higher. Gross profit ratio significantly high. The situation reflected in this case scenario may not constitute threat to auditor. Yes, there is no threat to auditor independence. Irrespective of this, detection risk for this engagement is high. For this engagement, detection risk is high because turnover has doubled. Gross profit ratio has doubled. So there is a high audit risk. Instead of saying high audit risk, they are saying high detection risk. That's the only difference. CAD has included in audit plan certain procedures like in respect of PPE. Which of the following procedure included in the audit plan is not relevant? We want to verify acquisitions. There is no acquisition at all as per the balance sheet. If you see, inspecting physical verification, that is correct. Assessing depreciation method, correct. Verifying cost of PPE acquired during the year. There is no acquisition, no, during the year. You see, even the question also at the first they said the company has acquired last time plant and machinery 2020 only. So in this year, current year 22-23, there is no acquisition. Yes or no? So this is not relevant. Next, which of the following statement is likely to be most suitable to explain the fact relating to variation in gross profit ratio as compared to last year? Gross profit ratio, which of the following is most? Gross profit ratio has decreased in 2023. Wrong. Gross profit ratio has increased in 2023 as compared to 21-22. It may be due to the reason that cost of material purchased with the company could have decreased. That could be the reason. Gross profit ratio has been decreased. No, that's wrong. Gross profit ratio has been decreased. No, they increased. No, gross profit ratio. So answer is B. In all the cases, they're saying decreased. So it became actually simple answer. So I thought a lot of interpretation is there because they said increased, which is actually correct. In all the three cases, decreased, they said. Second, let us see. Gross profit ratio compared to last year, no, increase. No. Yeah, gross profit increased because purchase cost, material cost would have been decreased. The reason could be either material cost would have been decreased, some direct expenses could have been decreased. That's the reason why profit has been increased. Yeah, I think B sounds logical, so B. CAD had also studied purchases and sales data of the company during the year and has also compared such data with the preceding year and earlier years also. It's a trend analysis, no? It's a trend analysis, absolutely forming part of substantive analytical procedure. It's not reasonableness test, it's not rational analysis, it's not structural modeling, it's a trend analysis. Considering the case scenario in totality, means the entire case you see, keep in mind, identify which of the following combination of standard is not proper for their likely relevance. In the above case, which of the following standards are not proper? SQC1, of course, important in every AB audit. 220, first time he is accepting audit, acceptance and continuous of client is important. 501, inventory. Is the company having inventory in this question? Inventory question, inventory. So these two are relevant. They are asking which are not relevant. Not likely to be relevant. Okay. Sorry, not this. Not proper for relevance. Not relevant. So these two are relevant. So obviously this answer is not. SA 550, 510, 220. 220 is relevant. No. 610 not required. Internal audit is not there na in the company. Actually, 220 is also required only. Acceptance of relationship is there, no, but we'll see remain. 500 evidence we should obtain. 700 reporting is important. SQC 1 important, SA 700. So this is most relevant. This is most relevant. A is also most relevant. But 550 related parties, that clearly says there is no related party transactions. 510, it's an initial audit engagement, opening balances. I think 220, 16, the company does not have internal auditor. Identify which of the following combination of standard is not proper for their likely relevance in performing and completing the above engagement. So judgmental. SQC1 I feel relevant. 501 specific considerations for selected items. Is there any inventory related point and all we discussed here? The company of course has inventory. So 501 is relevant, of course. Existence and condition of inventory we should check. 501 is relevant. 501 is relevant. External confirmation may not be relevant. Of course, inventory purchase sales will be there. So definitely payables and all will be there relevant. So 610 is not relevant. See, you will say I'll identify. 610 is not relevant. 550 is not relevant. 510 might be relevant. 210 might be relevant. SQC is relevant. Here only one item we will eliminate. 505 external confirmation, inventory, 220, SQC all are relevant. 700, 510, 220, 500 all are relevant. SQC1, 700 all are relevant. I feel in this option, two options are not relevant. Only in option B, irrelevant standards were discussed. So that's why I will select B. Why A, C, D, sir? Can you explain once again? Whatever audit I am doing, SQC1 I should see. Because I am accepting the audit 220. Initial auditing, I need to definitely observe this. 501, inventory is there, so obviously evidence. So 505, transactions with creditors status, obviously I need to. 700, reporting is important. 510, initial audit engagement, this is so important. 220 is important. 500 is important. SQ7, 700 important. So which is not relevant to 610? Work of internal audit is not relevant. Related party standard not relevant because those two circumstances were not there. So only option B discusses about irrelevant standard. That's why this combination is not relevant. These two are relevant only, but this combination of all four is not relevant. They are asking only combination. Getting it? Identify combination of standard is not proper. So option B. That's why option B I have selected. So option B is the answer. I hope you understood this. Case scenario 2. CAM Raja has accepted offer of appointment of auditor of an entity. As business carried on by the entity is new to him, he wants to gain an understanding of the entity and its environment, including internal control. In this regard, he has performed a process to obtain audit evidence regarding design and implementation of relevant control. He has also performed various processes like inquiry, inspection, observation in this regard. So he is doing risk assessment actually. He wants a reasonable assurance that accounting system is adequate, that all the accounting information which should be recorded has in fact been recorded. So he is concerned about completeness. Further, during the course of audit, he has noticed the following. Okay, what are all he noticed? As required by management, bank reconciliation is required to be performed monthly. However, the same is not carried out at stipulated date due to time constraint. This is a deficiency in internal control, weakness in internal control. The entity has a system of procuring its raw material supplies on basis of valid purchase order issued by the entity. Only when there is an order, purchase can happen. However, purchase orders are not numbered. It's a deficiency. Purchase orders must be serially numbered, pre-printed, that too. Computer generated, it should be if possible. Getting it? So that is a significant, that's a deficiency. Wages sheets are not verified by responsible official as required. That's a deficiency. Staff of the entity is responsible for bringing cash from centers in nearby areas to the entity's premises from where it has to deposit. However, concerned staff has not renewed insurance. Okay, cash transit insurance they have not taken. These issues we have identified. Fine. Based on the above, answer the following. The auditor has performed procedures to obtain audit evidence about design and implementation of controls. Which of the following procedure is more reliable to obtain evidence regarding application of a control? Whether a control is applied properly or not. Which of the following method? Observing the control or inspecting documentary, evidence or inquiry about application of control, studying design of the control, whether a control is applied properly or not, whether a control is properly applying or not, we should observe. Only then we understand whether a control is properly, whether an application of control is proper or not. We will get evidence only by observation. Suppose our control is already applied in the past, how the control was applied in the past, documentation will be there. If at all you are verifying the documentation of that inspection, so here actually observing is the best evidence for checking application of a control. Next, examination and evaluation of internal control is indispensable for CAM Raja. Correct only. It provides him necessary comfort relating to completeness of accounting information. Correct only. However, review of internal controls of the entity will not enable him. By looking internal control, I will not get to know the following. What? Whether frauds are likely to be located in ordinary. This I will get. Whether an effective internal audit department is operating. Yes, of course, by looking internal control system, I will know whether audit department is there or not. Whether his opinion needs to be modified. Yes, I will know. Whether any administrative controls has bearing on his work. No. Whether his opinion needs to be modified. Based on controls alone, we can't know. Only based on controls, we can't give opinion, right? Whether any administrative control bearing on his work. Administrative control has bearing on his work. So, whether any important control, nothing but. So, I think the option is C. Only by verifying control. However, review of internal control will not enable him. Reviewing internal control will not enable me to modify the opinion directly. It's not possible. So whether any administrative control has bearing means, is there any control that is important for me? Of course, by evaluating internal control, I'll get this. So option is C. As regards weaknesses identified by auditor in internal control like BRS and all, they are not doing regularly. Which of the following represents significant deficiencies? Non-performing BRS on a timely and not verifying bear sheet. Of course, they both are important deficiencies, but they are not. They both together alone not significant. Not performing BRS timely and lack of proper sequence in purchase order. Not performing BRS timely, lack of proper sequence in purchase order, not verifying wage sheet, lack of insurance for cash transit. All four deficiencies. You know what is the significant deficiency? It may be a deficiency or a combination of deficiencies where the likelihood of the magnitude is potential. That's a significant deficiency. Combination of deficiencies. All four deficiencies together constitute significant deficiencies. Which of the following is most appropriate regarding auditor's responsibility in 265? When you have significant deficiencies, you have to communicate the significant deficiencies along with the potential impact. Getting it? You have to communicate with the management. You have to give discussion to so that they'll understand better. 265 question. To communicate significant deficiencies to management. To communicate significant deficiencies in internal control along with explanation with, that is also correct. To communicate significant deficiencies in internal control along with explanation of the potential effect. To provide sufficient information to understand the context of communication and express opinion on the effectiveness. We need not express opinion on effectiveness of internal control. To communicate significant deficiencies in internal control along with explanation of their potential effect. Of course, 265 says very clearly, and provide sufficient information to understand the context of communication to the management. Yes, this is important. This is exactly direct communication of significant deficiencies to management and those charged with the governance. There is a side heading. There is a question in our book in 265, last question. Inside that they clearly explain this. Inside that this point is clearly explained. So the answer is option D. Finally, general MCQs. C.A. Muskan is auditor of two concerns, Wellstar Homes, Wellstar Stores. Confusing, no? You are auditor of homes and stores. You are auditor for two entities. One is homes, another one stores. The partners in both the firms are common. While auditing financial statements of Wellstar Homes, when you are auditing homes, she noticed that few expenditure bills pertaining to stores, another entity related purchases were entered in the books of accounts of homes. Which assertion of Wellstar Homes is disproved in the above? Which assertion? Friends, you know, in homes, I accounted some purchase bills not belonging to us. It is belonging to stores. We accounted occurrence not belonging to us. That assertion is affected. Occurrence is affected straight away. CAX is nearing completion of audit procedure during the course of audit of a company. Okay. He has found nothing unusual till now. The company is earning handsome profits since many years and there is a little debt burden on it. It is also in the process of expanding its business by taking loan from a bank. Okay. The bank has also granted in principle approval for lending the money to the company Which of the following statement is most appropriate in evaluation of going concern assumption being followed? The company has everything proper. You just have to check whether management is going concern assessing or not. You need not do in-depth evaluation at all, because you did not find any significant, you did not find any symptoms, you did not find any events or conditions that cast a significant doubt on the entity's ability to continue as a going concern. Appropriateness of management's assessment in relation to going concern may be made by the auditor. Auditor has to check whether management is making going concern assessment which is appropriate or not. That alone you will check. Without performing detailed evaluation, the answer is yes right away. But we'll see remaining. Appropriateness of management assessment related to going concern would be made by auditor by performing detailed evaluation. Detailed evaluation is not required. Detailed evaluation of going concern assumption is required only when auditor identified any symptoms, any events or conditions that may cast a significant doubt on the entity's ability to continue as a going concern. Appropriateness of going concern would be made by auditor directly by skipping. No. Appropriateness of going concern may be made by the auditor by necessarily examining cash flow. This and all required only when you have, only when you find any events or condition. Here company is having handsome profits, bank also is about to give loan, you did not find anything unusual. All these are indicating that going concern is stable. So option A. CA Piyush is offered appointment as stat auditor of a branch of a bank. Okay. He has also taken a loan of 75 lakhs from the same bank. Identify the threat. Some same bank I'm having loan. Self-interest threat. B. A chartered accountant finds during the course of stat audit of a company that management is not serious about findings of internal audit report. No action has been taken on the findings of the internal auditor for the last 2 quarters. He has further found that management has not disclosed information relating to transaction with another company. However, he has assiduously gathered that it is related party by going through the annual report of the past year, searching online database. Okay, so internal audit report was not considered by the management. Unusual. Management should consider. No action was taken. Careless. Management is careless. And related party is the one who is doing some very many things. The described situation is more appropriately denotes objectivity. No. Knowledge. No. Independence. Skepticism. Skepticism. When I am seeing internal audit report is not considered, no action is taken, related parties involved, because I am skeptical, I am discovering all this. Because I am alert, I am discovering all this. Skepticism. It denotes a skepticism. You have been appointed as a stat auditor of a company for the first time. Okay. It's become very important for you to understand the company and its environment. Yes. Which of the following activities are not expected to be included to know about the company and its environment? Okay, so while understanding entity, we try to gain knowledge about the structure of the company, capital structure, debt structure, evaluating whether company's accounting policies, yes, we understand. Understanding business risk, we do risk assessment, gathering evidence about receivables. That's a further audit procedure. That's not risk assessment procedure. So the answer is D. That's it. MTP1, MTP2, RTP MCQs were discussed. Typically speaking, we have covered 45. We discussed more than 45, 50 MCQs have discussed. That's why in the thumbnail I have kept top 50 MCQs. That's it. Okay. So in the next session, I will discuss in a separate video all descriptive questions. Preferably, I'll discuss MTP1, MTP2 once and RTP once, or maybe I'll see depending upon the comfort of recording. That's it.